Why don't we kick this off just kind of learning a little more about you guys?
Sure, sure. So, I'll start with myself. Um, I have a background in political sciences, so it's a lot of model or system thinking basically. So it's not really economics, but I found that in a sense, seeing how the pieces can work together is fairly useful. And I am both the tokenomics and the public figure guy, which makes me also the project manager. Then on the team we have a lead developer. He has 17 years of experience in full stack development, but he specializes in backend. We have two front-end developers. One has been brought onto the team by our first designer, and the second has joined us more recently, and he has a few years of experience with Web3 development. We have a first designer, which I mentioned, who is living in Portugal. He's working in a blockchain startup. So he already knew quite well the space, and this is also why he brought another front-end developer. And a second designer also joined us more recently to support us to speed things up a little bit because it was design was the rate limiting factor to develop our product. And they will also help us with future product developments, including SpaceX. We have three content writers. One is with us since the beginning. Another one has joined us a bit more recently. He's focusing on research and education materials. And the third one, you may already know him. He's Economizer. He's an influencer on Twitter, and he's a very smart guy. I mean, I noticed him when he made a thread about Wand, and when I saw his thread, I just thought this is like our white paper, but explained in a better way. And then we started chatting a little bit, and well, he was keen to help us because we do something innovative and actually new. And he has some skills in economics that I definitely don't have, and his insights are extremely important to us. Um, Following some of the discussions with him, we've made a few changes to the tokenomics, not the core tokenomics, but tying a few loose ends. Um, and I think it also represents kind of how we works in the sense that the model is good enough, it's strong, we've modelized a lot of things, runs plenty of simulations. Um, but in my mind, it's always a beta version in the sense that it's never final. We can always find something to improve upon, create some new utility, and so on. So I think that this is kind of the spirit that we have at the Wand team.
Cool. So, um, let's get a little more into your project. So, tell everybody what chain you're launching on, and give us some of those launch details.
Uh, well, we were planning to launch on Phantom, but with the whole Solidex and the whale that was liquidated, Phantom is not looking so good at the moment. So what we're doing is that we are having a discussion and we are going to have a vote with the community about the chain that we launch on. The choices will be Phantom, should the community wants it, but also BSC, AVAX, and Polygon. My preference would be Polygon or AVAX because BSC has kind of a bad reputation. But I think that it should be the community's vote because at the end of the day, this is their money that will be on the platform. So if a majority wants BSC, then it then it's an okay decision. Regarding the launch detail, um, well, there will be a private pre-sale for the people on the whitelist, and a few days after, like maybe 2 days, there will be a public launch. There is no
You
public
should
pre-sale or something like
introduce
this.
yourself after this and
And
say
the
crypto lord,
charts at
and
launch
then
will
start
be
asking about the
looking
charts.
a bit weird in a sense because we are not going to be stable. We are not going to move. There will not be a pump and a dump. It's just going to be a steady increase. So in a way, it's going to be a chart that is pretty boring because usually, if you want to calculate the price of a token, you need a liquidity pair. And then the price is set by offer and demand. With our main token, Scepter, it's not the case. We don't have a DEX, we don't have a liquidity pair. Instead, the price is set by a smart contract. And the price, I mean, all of the tokens are 100% backed by stable coins. It means that the price will not just increase like going to the moon in a few seconds or a few minutes. But it also means that when someone is selling, the price will not decrease. And this is like what makes us actually unique. It's that if you sell Scepter tokens, the price of the Scepter tokens doesn't decrease, it increases. And the way we do that is that there is a reason why we didn't want to launch on a DEX or didn't want to have a liquidity pair. It's because if you do that, the laws of demand and offer apply. It means that the price can increase, which is good, but it can also decrease, and that means that it's a fairly medium or high risk play. What we want is low risk. We want to ensure that the price will always increase. And for that, we have come up with a new formula to calculate the price of the Scepter token. The backing price is simply that you take the value of the Scepter treasury and you divide it by the number of Scepter tokens. This is the backing price. Investors will buy it above the backing price, and the gap between the buy price and the backing price will go to the Scepter treasury. It means that when you buy, you give that extra bit of money to the treasury, and because the treasury value will increase, the price of each Scepter tokens will increase as well. This is the first mechanism to increase the price of Scepter. Then, when you are an investor and you have some Scepter tokens in your wallet, you will sell it back to the protocol when you want to make a profit. And you will not sell it at backing price, you will sell it below backing price. And the gap between the backing price and the sell price will stay in the Scepter treasury. It means that if you sell, the treasury value per number of Scepter tokens will increase. And because that ratio of treasury per token is what sets the price, when you sell, the price of Scepter actually increases. And this is what really sets us apart from all of the other DeFi projects. And it also means that the price is calculated in a very different way than it is calculated on the liquidity pairs. It does sound a bit complex. I would say that it's not more complex than the price on a liquidity pair, but it is something new. It is counterintuitive, so it needs a bit of wrapping your head around it to actually understand that yes, it is possible, and that it will have an impact on how the chart looks like.
So this is Crypto Lord here, actually. So that's a pretty interesting concept. It's definitely kind of a new concept to me. And not only that, but y'all have got Scepter and Baton and Wand. So can you kind of, now that you've kind of explained what Scepter was, can you kind of go into the differences between it and the Baton token and how they kind of work together?
Sure. So yeah, Scepter, you just hold it and then you sell it at some point. You make a profit in USDC. Um, or you can choose to burn it. If you burn it, 90% of its backing will go to the Baton treasury, and you will receive some Baton tokens. Um, the Baton token is a reflection token. If you hold it, you will receive some weekly USDC rewards airdropped into your wallet. You don't have anything to do. Um, the airdrops do not come from token dilution. This is what makes us different from a node. Instead, the the to, the Baton treasury is invested, and what we do with the rewards from the investment is that we will compound a part of it, and we will send another part of it as airdrops to the Baton holders. What it means is that because we compound a part of the rewards, the Baton treasury will grow naturally. Even if no one is burning Scepter to get some more Baton, the Baton treasury will grow and the rewards will grow. So if today, or rather this week, you receive $1 in USDC, in a few months you may receive $2, and in a few more months $3 or $4, and so on. So usually with a node, you have some nice benefits at the beginning, and then you see that the rewards decrease every day or every week. With Baton, we want to do the opposite. We want to increase the amount of rewards every week. And this really makes us a long-term passive income play. You don't need to do anything. You just hold your Baton and you receive some stable coins airdrops. Yeah.
Um, all right. So so Scepter obviously has ways to increase its price over time. Does Baton have anything that kind of holds its price floor, or is it pretty set for fluctuation? Because obviously,
So
if you're holding it just for reflections, you want to make sure it's fairly stable, so you don't lose all your gains just from a price fluctuation.
yeah, so the best way to approach Baton is a bit like a node in the sense that you lose your initial. Don't expect to get it back. It's not going to be tradable on the DEX
Ah,
because
gotcha.
we don't want investors to be thinking about the worth of their Baton token.
Okay,
If you burn Scepter to get Baton, you do it because you want the weekly airdrops. Um, we do open a door in the sense that if you want some quick cash and you have some Baton tokens, you can sell it back to the protocol, but you will do it for 30% of its backing value. So if the Baton treasury is worth $3 million and there are 3,000 Baton tokens, it means that there is $1,000 per Baton token. You will receive 30% of that. So that would be $300. So it's not a very good deal for you. I don't recommend that you do it. But if you really need some quick cash, or if you don't like Wand anymore and you want to quit, you can do it. But
okay,
the best way to approach it is really you lose your initial.
got it. Okay, well, do you want to kind of go into the wand token now? Kind of explain what it is and how it's different from Scepter and Baton.
Yeah, so the first thing to know about one token is that you will never see it. It's not a token that you can buy or sell or anything. Um, it's a token that we mint one to one when Scepter is minted, and we burn it when Scepter is burnt. We use it as collateral on a lending platform, and against it we will borrow some stable coins, and we will use those stable coins to farm. Um, and the rewards from this farming will go to the Scepter treasury. So it's something in the background that only the team will see, and it helps support the growth of the Scepter treasury. It's like you don't really need to care about it. It's just something in the background that we use to boost the Scepter price.
Gotcha. Okay.
So do you want to kind of explain the difference? On your white paper, you've got listed a three treasury model. Is that something you kind of want to go into on how the treasuries are actually spent on each one, and
Sure,
how they're used?
sure. Um, so Scepter token, it's low risk. We want to keep it low risk, so it's only backed by stablecoins. As we know today, stablecoins can be unpegged. It is a risk. There is no way around this, but it's still the safest play on DeFi. Um, we also want to create some rewards with it, so we are going to stake or farm with these stablecoins. We will do it on audited platforms because we want to limit the smart contract exploit risk. Um, but yeah, for Scepter, it's only stable coins, so we don't expect a lot of returns based on it. But we want to hold to our promise, which is that its value will only increase. Then there is the Baton Treasury. The Baton Treasury generates airdrops for Baton holders. And here we can take a bit more risk because it's not backing the price of Baton. Um, and we will do a mix of stable coins, some native network coins such as BNB, AVAX, Phantom, Matic, and so on. Um, and also some blue chips holding and with automatic rebalancing, which is just a way to outperform the markets with while staying with blue chip tokens. What we want here is that if the market is green, the airdrops that you receive benefit from the green market. So you have some nice passive income. Um, and if the market is red, we can still send you some USDC airdrops because we have those low risk plays, maybe some stablecoin farming or some liquidity pair between stablecoin and native network tokens. This is a way to ensure that you will always get some weekly airdrops. It's going to be bigger if the market is good, but we don't want to be not sending you any rewards for a full week just because the market is red. So this is for Baton. And then there is a third treasury, which is the risk treasury. It is separate because it's for high risk, high rewards plays. And we want to do them without placing additional risk on the Scepter and Baton treasury. What we do with the high risk, high reward plays is that we do the how do I put that? We have a team of investment analysts. We ask them to review some projects either because the community sends them or because we, the team, think they are a good investment opportunity. The investment analysts make a review of the project. Then the governance council, which is elected by the community, votes whether or not we invest in it. And then the rewards are split. 33% stay or are reinvested in the risk treasury. 33% go to the Scepter treasury and 33% go to the Baton treasury. So in effect, if you hold some Scepter tokens, you have the stability of stablecoins, and you also have a part of the rewards from high risk, high reward plays. At the moment, the investment we are looking towards is NodeFi. NodeFi simply because it's a token that has actual utility. It's very uncommon in the DeFi space. So I think that it will it's a project that will live for a long time and have some nice rewards over time. Um, mm, and yeah, because it's a separate treasury, we feel that we can go into higher risk plays without actually risking the money of the investors. We are not going to act like Degens or apes because we do want to make some to have a responsible strategy management. But we also want to go into the higher reward space because this is where a lot of money is
What are you
made
asking
today
about
in
three
DeFi.
things? It'll take 30 fucking minutes.
Cool. Awesome, man. So this is probably a good time to do this giveaway. We're giving away $100 to one person. So you guys probably pretty used to how we do these giveaways, so we're going to open up the AMA giveaways channel real quick. You're going to have 5 minutes to react to the giveaway bot. We appreciate everybody listening in, and so that's why we do these, to try and give back to you guys for supporting us and supporting the people that we have on here. So I'm going to go ahead and open that up right now. You guys will have 5 minutes under the AMA giveaways section, so it is public now, so the time has started. Go ahead and react to that. Crypto Lord, you got a few more questions?
So what's kind of your roadmap from this point going forward? What's kind of next steps? And, I know y'all are working on the Space Dex, if you want to talk a little bit about that as well.
Sure. So, like I said, we will not be launching on a DEX, and this comes with some limitations. It's going to be hard to go cross-chain. It's going to be hard to be listed on DeFi Llama, CoinGecko, and so on. And this is one of the reasons we want to launch SpaceDex. SpaceDex is a DEX, of course. It's also going to be a bridge. And what we want with it is to have one liquidity pool for all tokens across all chains. We think that it will make a much more efficient use of the resources on the DEX. Basically, it means less slippage, less fees, and more revenues for the liquidity providers, and also impermanent loss protection, because we want investors to be able to stake single assets and not liquidity pairs or liquidity triples and so on. The connection between SpaceDex and Wand is that with Wand we will have quite a large treasury, and we need to use it in an efficient way. And I think that with the SpaceDex we will have that. We will also make it possible to have the Scepter token on a DEX. It will make it possible to have it listed on DEX screen, DeFi Llama, and so on, and eventually to be listed on a centralized exchange, which is yet another step towards our end goal, which is that I want it to be possible to buy Scepter tokens with euros, dollars, and so on with a credit card, and to pay with it on a credit card. The reason for that is that if you have Scepter, if you can purchase it with your credit card, it means that at the beginning of the month, you can buy some Scepter and use it throughout the month and see its value actually increase over time. So it's a bit like, instead of just holding dollars or euros and see its value stable or decreasing a bit with inflation, you can pay with a token or a currency that actually increases in value, which means that you see your purchase power or buying power increase throughout the month. And I think that it brings some actual utility for everyone, in the sense that you don't have to bet on it. You are sure that the value of the token will increase over time. And if we can do that, then we open the door to massive or mainstream adoption of the token, because we can bring the safety and low risk profile of stablecoins associated with the high rewards that are possible on DeFi. So it's not going to moon like a Titan fork, but it will be a nice steady increase in value.
Yeah, that sounds really interesting, actually. Another thing that kind of sounded interesting from your white paper was the utility NFTs for contributors. Can you kind of go into that? It looks like you've got what y'all call bounty hunter NFTs.
Yeah. So we are community first and community driven. It means that I mentioned the elected governance council. They make a lot of decisions. They help us. They dox us. They are on a multi-sig, so they bring another layer of safety. They keep us accountable. They are also advisors to the team. We just don't want to be a team living in a bubble and disconnected from the community because it happens too often, especially after launch, and I want to avoid that problem. Another way to be community driven is by involving the community in our investment choices. We do that with the governance council again, with some votes for the larger investments. We also want some inputs from the community to tell them, tell us, okay, look at this new platform, it looks good. There are docs, this is their tokenomics, and this is why I think it's a good choice for one. If we do decide to invest in that project and we make a fair amount of profit, the community member who showed us this project will receive an NFT and a share of the rewards that we generated with this investment. The share of the rewards will go between 2.5 and 7.5% of the rewards generated. So it can be quite significant. Imagine if you had shown us Sphere before it launched, you would have made a nice profit just for filling in the form. It's a way for us to ensure that we're not missing out on a good opportunity, because even though we love DeFi, this is why we're here. We also work a lot, and it takes time, and we don't want to miss out on good opportunities. And I think it's also important to involve the community in the choices that we make. Saying that we are all about community. I mean, a lot of projects say that, but we want to put it into action. And one way is to give an incentive for investors to participate or to contribute, and to reward them when they do.
Yeah, not many projects do stuff like that for their community, to actually not only give credit for giving you guys a good profitable idea, but then to also let them share in some of the profits that their idea created. So I think that's an excellent idea. I think next we need to probably get into kind of your security stuff, like audits and multi-sig, all that kind of stuff. I know y'all got look like y'all got.
Did y'all get an Obsidian KYC?
Yeah, I mean, I think that the only thing that we don't have is a public doxing. In terms of KYC, we have Obsidian KYC. That means me, the developer, the treasury manager, and the governance council members who are on the multisig. All of us are KYC'd. We are doxed to the governance council. They are doxed to the team as well. So they literally have a picture of my identity card. So if I try and run away with the money, I'm basically screwed. And then there is the multisig. For the for the risk treasury, it's a 3 out of 4. There are 2 team members and 2 governance council members. For the Scepter and Baton treasury, it's going to be a 4 out of 6, with 3 team members and 3 governance council members. So even if the whole team wants to rug, we cannot. And I think that this is much more important than a KYC or a doxing, because you never really know if a person. I mean, if I'm KYC'd but I live in a country that is not so regulated, I can rug and I'm not going to be very worried about the KYC or the doxing. But with the multisig, even if I wanted to, I wouldn't be able to. And this is also why we want some community members on the multisig, because I think it's the best guarantee against rugs. So this is for the treasury protection. Then we have the audits. Before we launch, we will, before the pre-sale even, there will be a security review by CryptoNerds, another one by Hive, and one audit by Certic, and one audit by PragmaShield, who is run by Kama, who has been auditing Sphere, who has found a bug in Titano V2 just the day before they launched. So with these 4 audits and reviews, I'm pretty certain that the smart contract risk will be close to zero. It's never absolutely zero, but I don't think we can get much closer to zero.
Right, and I wanted to ask you about your marketing plans as well. Obviously, you guys have come in here and done this AMA with us today. If I'm not mistaken, I think you had one right before this. So,
Yeah.
what else do you guys have coming up as far as marketing goes?
Um, so marketing for us is organic. It means that we don't pay or give whitelists for as giveaways or the ways that I mean we are community driven again, and that means that we give all of the whitelist spots to the community members who help us by contributing, whether it's outreach or helping us with the model or contributing to the governance and so on. And in return, we keep the whitelist spots for them. Um, and they help us quite a lot with the outreach. If you look at our Discord, we have a bit more than 7,000 community members. It may not sound a lot, but we don't give whitelist against invitations, which means that we don't have a lot of bots. So I think that 7K is actually quite a lot. And I say that because it shows that our strategy for organic growth is working, and this is our marketing strategy at the moment. My plan at the moment is to continue with this organic growth. When we launch, we will see that the chart of Scepter is, it just keeps going up. It doesn't decrease, it doesn't stay stable, it increases. And this will be a huge marketing tool because if in a day like this, you have everything is red and Scepter is green, this is the best marketing we can have. That being said, if we need more volume, then we will do some paid marketing. I hope that we don't need it because I believe that it's a less efficient way to do things. And I would prefer to spend the money to pay the developers and the moderation teams because they are all doing a great job, and I need them to keep doing such a great job. But if needed, then we would also have a marketing budget.
Okay, and how is the team going to get paid?
We don't have some tokens or anything at launch. Um, there is a 5% buy and sell tax that goes to the team for Scepter, and 10% of the rewards of the Baton Treasury goes to the team. This is the only way that we get paid, in the sense that we don't get an initial token allocation or anything. And we will share the revenues as a percentage between the team members.
Gotcha. Okay. Let's see. I'm just kind of scrolling through a few of these questions. We've actually got one person with their hand raised. I'm going to try and bring them up because they wrote a question in here, and I'll just let them ask it. Bitcoin Elf,
Oh.
you want to hop up here and ask your question? How's it going, man?
Hello?
You there? If your voice
I
isn't
can't
coming
hear
through,
you,
you
mate.
may just have to disconnect and then reconnect. Sometimes there's a little bug with Discord there, so disconnect, reconnect. I'll bring you back up.
Hello?
Oh, there we
Oh,
go.
there
Hello.
we go. We got you.
Okay, yeah. I may have missed it with audio dropping sometimes, but they mentioned the audits, and I'm just wondering who or what organization is going to be doing audits for them.
Yeah. So we have 4 audits or reviews. The proper audits are with Certic and Kama, who is working at Pragma Shield, who has been auditing Sphere and Titano and a few other ones. And we will also have some reviews by Cryptonaires and Hive Investments.
Okay, Certic. Then that's one I've heard of Certic. I haven't heard the other ones, but I'm also not an expert. But yeah, okay, great, thank you. And I did have a question about the multi-sig, the security on that, but you seem to have answered that already. And oh, the one thing I was wondering about is time locks. Do you have any kind of time lock situation for when money is accessed or moved or anything like that?
So usually the time lock will be on a liquidity pair, and we don't have a liquidity pair, so it doesn't really apply. There is no time lock on the treasuries because they need to be managed. Otherwise, we cannot invest them. Um, but it is behind the multi-sig with non-team members. So this is the best mix between efficiency and security that we have found.
Okay, thank you so much. Thanks.
Thanks for coming up and asking. If anybody else has got a question, you can go ahead and raise your hand, and we can bring you up. Otherwise, I think we've asked most of the community questions up to this point. Is there anything that we haven't covered that you'd like to talk about?
Uh, Let me think a few
Oh,
seconds.
there's actually
Uh,
one. I know one of our regulars in our chat has asked, and he was asking if the state of the market has kind of impacted your decision for launch. Do you guys like? Are you open to delaying if the downturn in this market is extended longer than it is, or are you pretty set on launching regardless? Go into how that the market condition affects your decision to launch.
Um, so it's a bit it's actually a complex question because we're not afraid of the token of the price decreasing because we just don't have the same mechanics to set the price of the token as the other projects. So this is not a risk for us. What is a risk, however, is that if the market is red, the investors don't have the money to actually invest. And then what we will see is that the price of the token will not really increase, and that would be a failed launch. So it's not about losing money, it's just about gaining less and having less of a wow or a good hype effect at launch. So if the market is really deep red, yes, we would delay launch. But I think that in this case, we would actually have a vote on it because, um, yeah, it's the kind of decision that I think the community should make. Um, if the market is green, of course, we're not going to have a vote because I just assume that everyone would be okay to launch. But if it is red, I'd be happy to have a community vote about it.
Cool, that's good to hear. Yeah, that was actually a discussion we were having in our group earlier. How the teams on these projects would handle launching at a time like this. So I appreciate you answering that. So if there's anything else that we haven't covered that you want to talk about, let's go ahead and cover that. But I think otherwise we've had a pretty thorough AMA here, and I think we got everybody's questions answered. So is there anything else?
Um, no, just really have a look at the white paper and the simulator. I sent the links a bit above. Um, I just want to remind everyone that this is not a node or a Titan of Work or anything else. And I think Wand is its own category of DeFi projects, and a lot of the assumptions that we have with other projects don't apply here. So just do your own research. I don't give financial advice. And if you have any question, I mean, our community is more than happy to answer all the questions. I'm quite often on the chat myself. Um, and I hope that you just keep an eye on us for launch or even later on for the future utilities that we will develop.